Hello and welcome to the Reorg, where we dive into the Satoshi Nakamoto Institute archives and re-examine old ideas after years of accumulated proof of work. This is your host, Michael Goldstein, also known as Bitstein, and joining me as always is my co-host, Pierre Rochard. Pierre, how are you today?
Doing very well. How are you, Michael?
I'm doing great. We're coming to the end of quite the journey on the Reorg. Today, we are concluding our reading and examination of the S&I mempool crash course in Bitcoin political economy. So as a reminder, these are articles written primarily from about 2013 to 2015 that laid out our vision of what Bitcoin was and how we thought it would, kind of play out, why it was important, kind of everything. And, we've gone through the fundamentals and why it would grow, why altcoins were no good, why volatility doesn't matter, and so on and so forth. And last week, we kind of hit what I think of as the climax with hyper-Bitcoinization, which is obviously the sort of coup de grace, the success point of Bitcoin. But today, the conclusion is an article, actually my singular written contribution to the crash course, and it's everyone's a scammer. So the idea here was, given hyper-Bitcoinization, what mindset should a person have going into that? So everyone's a scammer is an article I wrote and published on September 11th, 2014. The price was about $477 at the time. And this was, I guess, I'm trying to remember the date. Was there another bull market after 2014, like after September 11th? I get 2013 and 2014 confused sometimes.
14 was it was the beginning of the bear market.
That's right. Yes. Okay. Yes. Because it was November 2013 that Bitcoin went to $1,200 for the first time, so over $1,000, and it had kind of been making its way down. And in fact, into 2015, as if you go listen to some of the previous articles or the episodes and hear some of the prices, it was getting down into the 250 range at times. So this is also a very hardened mindset over the course of just dealing with where Bitcoin was, but also combined with where we thought it would go. So it's a provocative article. The title is provocative. It still provokes people to this day. People get really, really hot and bothered by the word scammer because it's taken very, very seriously. Whereas the actual article, what people will find is scammer is meant a little more, kind of broadly and rhetorically. But we'll get into that. And so on here starts with suggested background reading music. So for those who are just listening, the article's imagery comes from the wonderful Sergio Leone Clint Eastwood movie, A Fistful of Dollars, based on another phenomenal film called Yojimbo by Akira Kurosawa. And the reason for this is because this is a stranger. He's known as the stranger in the Fistful of Dollars, and he doesn't really have a name, although he's known as Sanjuro in the old the Japanese film, which is a samurai film. The reason why I thought that was useful imagery is because the stranger is someone who comes into this town and has to deal with two warring factions that are both scammers in their own ways. They're both basically bringing terror to the town, but sort of competing over it. And so the stranger is someone who has to use his cunning to try to pit them against each other and make the town safe. So So to me, it was a great sort of, just imagery for having to deal with, just bad things from every angle that you have to deal with. So the suggested background reading music, we will not be playing it in this because of copyright issues. But I do recommend when you read this to have the Ennio Morricone Fistful of Dollars suite playing in the background, just to give the right vibe. So I'm going to jump right in. There's a war going on. Bonnie and Clyde cannot simply rob First National Blockchain. They can hack servers and unencrypted wallet files or scan low-entropy brain wallets, but the cost of obtaining bitcoins hoarded on a high-entropy password-protected paper wallet, for instance, are incredibly high. A computer cannot be expected to brute force the wallet in the universe's lifetime, so a trespasser would have to employ expensive tactics such as kidnapping and torture on any prospective individual target. Criminals, con artists, and swindlers cannot rely on violence to get the wealth they desire. It has become too cumbersome. These scoundrels must rely on good old-fashioned market forces. And this does date things when paper wallets were seen as a very secure form of storing Bitcoin, whereas today I think people would have many more sort of critiques of that. But that's not the purpose of today's article. And it's working. Bitcoin is poised for exponential growth, so the opportunity costs of not being involved to the highest personal degree possible are incalculable. Yet merchants, investment peddlers, and other hoarders have been able to convince countless Bitcoiners to part with their future riches, despite the obvious downsides, given you have a long enough time horizon to see the coming post-fiat world. They'll tell you spending is vital, that Bitcoin 2.0 will be even better if only you give them some of your Bitcoin 0.9, that was the version number at the time, or that your Bitcoins are worth only $475 a piece. They'll tell you this with a straight face, the wringing of their hands unseen across the internet. And once you have fallen to temptation, they'll leave you on your own to learn there are no backsies. In the real politic of the blockchain, everyone is a scammer. There is a war going on for your Bitcoins, and willpower is your only defense. And, the Bitcoin 2.0, it really was quite the buzzword at the time. Everyone, that's how they wanted to present all of the various, altcoin and some kind of like early app coin ideas, Ethereum, et cetera. It's like always with this language of Bitcoin 2.0. That's the next thing. Bitcoin is the MySpace, and now we're coming in with the Facebook. And this stuff was everywhere. And yeah, it was from all angles, and as this alludes, it's even merchants, investment peddlers, hoarders, everyone is trying to get their hands on it. But this no backsies is just an important concept. Just a reminder that in Bitcoin, when you send Bitcoins, it's irreversible, and so any decision to do so is one that should not be taken lightly. And that is sort of the main lesson of this article. Do you have anything else on that intro?
No, it's very good.
All right. Endless scammers everywhere. Bitcoin is a dangerous place. There's an endless list of hacks, scams, and thefts. Bitcoin promises a network with distributed trust. You know why? Because other Bitcoiners exist. Not every Bitcoin scammer is merely an amoral businessman or investor. Many are outright fraudsters and con artists. When you buy a rug from Overstock, at least you actually get a rug. When you send money to Ethereum, you may actually get a worthless Ether token eventually. You know what you will probably never get? Your Butterfly Labs pre-order or your Gox Bucks. I guess a few people did get a few Gox Bucks, but overall, yeah.
I thought this was going to turn into a play on words with the rug. Getting rug.
This was actually, I think, before that was common lingo.
I know, that's
so
what makes it funny.
It is funny that you used to get rugged by buying a rug from Patrick Byrne on Overstock.com.
It does establish, though, a spectrum of scam, right? Where what end do you have scams where, you got a rug, but Bitcoin then 10x's in value, and you could have bought 10 times more rugs if you'd waited. And, that gets into the chairs meme. And then at the opposite end, there's scams where it's like, hey, send me 1 Bitcoin and I'll send you back 2 Bitcoin. And of course, you never see the 1 Bitcoin or the 2 Bitcoin. So I think that, even within the article itself, you're already drawing a distinction between different kinds of scams.
Yes, and I think that's very important, given some of the vitriol that people have over that word, and perhaps that's something we can talk about after we've finished the article. For those who don't know, I think most people are familiar with Mt. Gox having failed, but Butterfly Labs was a company that was trying to sell state-of-the-art mining equipment at the time. This was very early in the ASIC game, and they took a lot of pre-orders and they did not deliver. Some scams are pulled off by convincing other Bitcoiners to not take advantage of Bitcoin's value proposition. That is, they convince Bitcoiners that while they shouldn't trust third parties, this guy is totally cool. I'm looking at you, Mt. Gox. Others convince them to play investment games that turn out to be Ponzi schemes. Sup, Bitcoin savings and trust? It's been so long, I don't totally remember the whole story of Bitcoin savings and trust, other than it was effectively a Ponzi scheme.
I think that's right. Based in Texas, if I recall correctly.
Texas, I think now is a little more strict on reserves and such.
Well, the guy who did it, if I recall, if this is the same one I'm thinking about, he got arrested. So justice was served here.
Yes. Some scams are the purest synthesis of Bitcoiner avarice and stupidity. Ponzi.io explicitly marketed itself as a Ponzi scheme, promising you to send back more Bitcoins coming from the pockets of the next investors. Have fun. Their address, one Ponzi, ... received nearly 350 Bitcoin. So obviously, like in raw numbers, 350 Bitcoin at the time is not the same as today. But then you consider, what that is today. So at the time, that would have been, it's still quite an impressive number. It was about $167,000 worth of Bitcoin was sent to this thing. Today, that would be on the order of like $42 million worth of Bitcoin sent to that address. And this was something, I mean, the address literally starts with Ponzi. It's a vanity address, and plenty of people got their money back, but it was literally just sort of this experiment thrown up on Bitcoin Talk, and people were willing to play that game. It was quite telling that some of these things people really do want to gamble and learn the hard way, and there's no stopping that. This one is very informed consent of you are going to get wrecked, but that doesn't stop everyone. Some scams are outright malicious. Scammers have resorted to malware and ransom. CryptoLocker infected computers by encrypting the user's files and only gave up the private key if a ransom was paid in Bitcoins within 48 hours. So that was an early ransomware, which has obviously turned into a sort of major industry over the years. I think I saw an article just recently where a company that had existed, I think in the UK for over 150 years, just got totally obliterated because they did not have a proper company backups, and they got totally ransomwared and didn't have a way to fix that. And these things happen, unfortunately, but it does call for us to take computer security much more seriously. So in some sense, it's kind of a blessing in disguise for the rest of the market.
Yeah, was there a ransomware bubble though? Because I feel like I don't really hear about it as much anymore. Maybe it's just become too commonplace.
Yeah, it could be, that could be the case. I don't feel like I hear as much anymore. So it could also be that as these things happen, it changes the dynamics of how these things actually occur. So it's like what are the payoff schemes like? How well can you get away with it altogether? Like if people are learning to just have like a backup and not pay, that obviously makes it kind of pointless to do it. So yeah, I think these kinds of very malicious scammers, they're always going to be playing sort of cat and mouse games. And I don't think they're going to retain the same business model the whole time, because people harden things up on one end. So they just go look for another type of vulnerability to attack. Scammers have resorted to blackmail. On September 8th, a hacker gained control of Satoshi Nakamoto's email account, using it not only to deface the Bitcoin SourceForge page, but to allegedly find out Satoshi's true name. From a Vice article, after inquiring what the hacker was trying to get out of all of this, he said, Bitcoins, obviously, but don't forget the lulz. Scammers have also gone to the trouble of leaking nude photos of celebrity to get some Bitcoins. That one was the so-called fappening event, where the iCloud the iCloud hack that resulted in many very intimate photographs and other stuff from a lot of celebrities were leaked onto the internet. But there's a story linked to it. It was actually written by Daniel that kind of looked at some of the underlying like Bitcoin incentives that existed. And it was interesting because it was both a situation where, Bitcoin kind of changed the nature of, it kind of does allow certain bad things to happen. But interestingly, it was also a case of what he tried to argue in Bitcoin's rugged individualism, which we covered a few episodes ago, which is the organization of people doing this actually sort of fell apart because the incentives of Bitcoin made it hard for them as a criminal organization to kind of retain loyalty to one another. So scammers will do whatever it takes to increase their Bitcoin holdings. You know this. You scammed someone to get yours. You probably did not outright defraud or hack someone like the above, but you necessarily took advantage of their short-term thinking. And now we begin some of the non-malicious scammers that we have to think about. Merchants are scammers. At long last, Newegg accepts Bitcoin, along with Overstock.com, TigerDirect, Dell.com, Expedia, and other major retailers and websites. So let's go spend all our Bitcoins, right? Not so fast. Let's wipe off the drool from looking at all the shiny toys and think this through. Merchants have absolutely every reason to accept Bitcoin. BitPay recently removed all fees for payment processing, including currency exchange. Not only can merchants receive payments without fees, but there are, of course, a litany of other benefits, from no fraud or chargeback to easy international payments. They can pass on their savings to customers or increase their profit margins. They also can and should hold on to Bitcoins as their accounting permits, so as to earn profits from future price increases. After all, if Bitcoin increases adoption for payments, there are only so many units to go around, so each one will become more valuable. So I was advocating for a Bitcoin treasury strategy for corporations in 2014. And of course, Speculative Attack also came out that year. So 2025 is really taking 2014 S&I very seriously.
Finally, the world is catching up.
So merchants are in a good position. They can save money on their business, and they can try to purchase Bitcoins with retail goods, just as many purchase them with dollars or euros. If I were a merchant, I would most certainly encourage people to shop at my store in Bitcoin. I might even try to convince them, despite its fallacious economic reasoning, that spending Bitcoins at my store is actually good for Bitcoin, certainly more than you saving and speculating on them. After all, quote, it could become worthless overnight, and, quote, its future depends on it. Because I say so. I might even say things like, and here's a quote, "My shoppers are among the first wave of Bitcoin users, and we're thrilled to accept the cryptocurrency as a form of payment. Just like you, we also believe Bitcoin can be the future of digital currency. But if you've been saving it and hoping it'll make you rich one day, you're better off spending it if you want it to succeed." End quote. By me, I mean Newegg. Their recent blog post is called "Why Saving Your Bitcoin is Not a Good Idea." The reason? It means you aren't spending at Newegg. So this is something I think most of the time when merchants are trying to entice you to buy things with Bitcoin. They might be a little more implicit with how Bitcoin, spending Bitcoin might kind of help the economy because you're helping in various ways of just, kind of spreading the money and, just kind of get commerce going and all these kinds of things. But I do find it funny. It was like Newegg, which is, a notable company. I've bought plenty of computer parts from Newegg, none with Bitcoin. But, the fact that they would be so explicit at that time of, saving the Bitcoin is bad, give it to us, is just, it was quite something. And I at least appreciate that most merchants who are trying to sell you things for Bitcoin, they're at least trying to actually sell you something. They're not merely trying to tell you that saving is bad. We do see a lot of, you need to use your Bitcoin too, but it's not quite this much browbeating.
The only other example I can think of that goes perhaps further is there's a gold company that says Bitcoin's worthless. You should spend your Bitcoin to buy our gold, which it's like, wow, that's interesting.
Yeah, I mean, perhaps you want to make some investments and get the gold for some computational devices that will help you mine better or something. But otherwise, I don't know if that actually works out so well. Most merchants even choose to immediately sell the Bitcoins they receive. They scam you out of their Bitcoins they do not even want, uninterested in the future value of the network. I don't know that Newegg is a public company, so I don't know if we'd be able to see how much Bitcoin they held on to. But if I had to make a guess, I doubt that they held on to the Bitcoin that they received from people buying computer parts in 2014. So the, in italics really emphasize the lesson here is that merchants are scammers because they lead you to believe that your Bitcoins are only worth the price of their retail good in order to allow themselves or those to whom they sell the Bitcoins, if they so choose, rather than you, to benefit from future Bitcoin price increases. And, we talked a little bit about this when we covered the hoarding article, where people are so, they really want people to be spending Bitcoin, which they see as using Bitcoin, where just holding it is not. And it is interesting. Like if a company is not even holding the Bitcoin that they're receiving, it is very strange to see how that would help Bitcoin. And so at the time when people are tricking themselves into thinking that way, is like they think they're helping, but then Newegg gets the money, presumably just sells it off. So some other hoarder somewhere just made off like a bandit with, Bitcoin at that given price. And you got, your new hard drive or something.
Yeah. Yeah, I don't know that I don't think they held on to the Bitcoin.
we should probably ask. We should see if this. I'm also curious if this article is still up. I'll have to dig into that article and see if see if it's even still around, or did they delete it at a certain point. But as a follow up, so merchants are scammers, and that's a good thing. This is not to say merchant adoption is bad. In fact, from the hoarder's perspective, merchant adoption is great. First, merchant adoption means that there is more demand for Bitcoin, that the Bitcoin network is growing, and that Bitcoin is thus more valuable than it was yesterday. Second, merchant adoption means there are more places to spend Bitcoin. This does not mean a hoarder will actually want to spend Bitcoins. More importantly, he can spend Bitcoins. Demand for cash exists because there is uncertainty of future needs, and the holder of cash believes he will come across currently unknown opportunities in the future that can better satisfy his needs than any current opportunities. When an opportunity exists, he believes benefits him more than what the same cash can get him in the future, he is able to seize it. As Metcalfe's law shows us, the value of a network increases exponentially with each additional node. With each additional merchant, there are more potential people to trade with, and thus more potential opportunities to satisfy his needs with cash. So, this is why it's also good because, when those types of merchants exist. Even if they are selling it, you could say it's like, well, there is someone behind them that's willing to buy up those Bitcoins. So there is someone along the line is demanding them. But, hopefully, especially if it's a company that does have an explicit, Bitcoin treasury strategy where they are holding on to their Bitcoin. I know of businesses that they use the fiat that they receive for all of their operating expenses, and then Bitcoins they receive all go into cold storage because they might not have as many actual Bitcoin transactions, but they take every one of them very seriously. So a company like that, the fact that they're accepting Bitcoin, the actual trading of the Bitcoin to them is just trading from weaker hands to stronger hands, but you are then experiencing a stronger demand to hold Bitcoin as a cash balance. So, that part of it is very good. It's just the actual from your individual perspective, passing on the Bitcoin is only good for Bitcoin's value insofar as you have weak hands and you're giving them to stronger hands.
It's the lesser fool theory.
Yes. Yes. Of course, these benefits to the hoarder do not require merchants accept Bitcoin given the right infrastructure. Zappo debit cards, for instance, give the hoarder the ability to use Bitcoins on existing credit card networks. This means hoarders can already use Bitcoin as their unit of account, whether or not merchants even know what a Bitcoin is. The more Bitcoin can be used as a method of payment, the fewer dollars hoarders must begrudgingly speculate on, a risk they typically only wish on government agents and skeptical economists. Thus, the primary advantage of merchant adoption is that your average balance of Bitcoins held can go up. You don't need to buy dollars in anticipation of making dollar payments. Instead, you can replenish your Bitcoin hoard after you make Bitcoin payments. I think there's a lot of good in this, and there's also a lot of things that are a little dated. I actually don't know whatever happened with the Zappo debit cards, although we're starting to see a rise in more Bitcoin
there's lots of
payment stuff now.
Today.
As far as like the unit of account, I think as we discussed unit of account, you didn't need to be able to spend your Bitcoin to go get coffee using some Bitcoin credit card in order to be using it as your unit of account. What really mattered was simply what you were doing profit and loss on. However, some of this stuff can reduce the accounting costs depending on how cumbersome it is to deal with capital gains taxes depending on your jurisdiction. And obviously, like more software on that front can also make that a simpler thing to deal with on a cognitive level. So this does mean for those, because this is a common thing that you hear is like people who are pro spending Bitcoin, they'll say something like, well, I have to spend Bitcoin because I only earn Bitcoin. And to me, that it's a bit of a red herring or non sequitur because it's like that's not really the argument. I mean, no one's saying that it's like bad to have a non-zero time preference because it's impossible for anyone to have a non-zero time preference. It's the idea that misplacing what is actually benefiting the Bitcoin network in that instance. It's the fact that merchants do accept Bitcoin, meaning there is demand for Bitcoin, and the fact that you are able to reduce the number of dollars you hold, which is sort of inherently shorting Bitcoin, while also maximizing the amount of Bitcoins you can hold. Those are the things that are actually sort of benefiting the network macroeconomics, rather than just the fact that you're spending the Bitcoin. Between merchant adoption and debit systems, Bitcoin becomes a more valuable good to hoard. Good news for Bitcoin. Investments are scams. Bitcoin is exciting. Looking at a static wallet file and balance is not. Instead of holding and forgetting, many Bitcoiners choose to, quote, put that money to use, and endless crypto peddlers are ready to snatch your Bitcoins up. They'll offer you mining contracts, present their plans for a hedge fund, or entice you into investing in a Bitcoin company. Today, the most popular investment vehicles for Bitcoiners are Bitcoin 2.0 schemes, ranging from Mastercoin to Ethereum. All of these are scams. Regardless of their ability to actually deliver their promises, they all fail a simple test. Is the return on investment positive? If you are stuck in a fiat mindset, you may well make a quick buck. But given Bitcoin's extraordinary expected growth, can one really expect to do better than one can by holding it? Long-term investors should use Bitcoin as their unit of account, and every single investment should be compared to the expected returns of Bitcoin. If hyper-Bitcoinization occurs, Bitcoin holders will see their purchasing power increase by orders of magnitude. Bitcoiners should think twice before throwing away even a couple millibits towards a project, quote, just to see where it goes. A running joke in the community is how expensive the 2 pizzas Laszlo bought were. We joke about $1 million pizza, and hyper-Bitcoinization has not even occurred yet. I praise Laszlo for his entrepreneurial use of a new technology, but I do not wish for myself or others to be a Laszlo. I will point out in that article, in that historical event, there are many things to praise Laszlo on, and I really do think he's a great figure in Bitcoin history. But I do think there's also an underappreciated figure in that very story, which is the user Jerkos, Jercos, who is the one who actually sold the pizzas for Bitcoin, and that too is an extraordinary entrepreneurial act, and the trade couldn't have happened without both sides, and his side was the one that was creating increased demand for Bitcoin, and so we shouldn't forget this. But the point here so far, just the need to use Bitcoin as a unit of account in order to take a look at any investment, it can't be understated how important that is.
Yeah, what I like about this story is that there is often a view that exchanging Bitcoin directly for goods and services is real commerce with Bitcoin. But if you exchange Bitcoin for dollars and then spend the dollars on goods and services, then that doesn't count. That's just like speculation. That's not utility. And they'll point to the pizza story as an example of real commerce. But in fact, it's the latter. What happened is that it was not a direct exchange of pizza for Bitcoin. It was an indirect exchange, and they used dollars in between. And so I would encourage the folks who, they'll say, oh, look, like Bitcoiners don't spend their Bitcoin enough. But okay, look at the volumes on exchanges where you see, whales selling billions of dollars worth of Bitcoin. And what are they going to do? They're going to go spend those dollars on something. That's just the same as if they had directly exchanged the Bitcoin for goods and services.
Yes, money is just another good. That's one of the things to understand, especially from an Austrian perspective, is that money is just one of many goods. It's just the most liquid good, which makes it especially useful for the purposes of indirect exchange. And obviously, as people converge on that value just grows and grows, and it becomes sort of the dominant feature of that good. So in that case, when you're trying to acquire Bitcoins, sometimes you'll have goods and services like pizzas to offer. Other times, all you might have on hand are dollars. And so basically being a merchant selling for things for Bitcoin is being the person who has the pizzas. And, when you have the dollars, you're either some kind of trader, or you're just a laborer who acquired dollars for your labor, and that's what you have to offer on the market. And yeah, perhaps, some of those people might want to consider accepting Bitcoin as payment for their labor as well, if they can. And there's services that can help them do that. But it also depends on what else they need to be doing in the economy to help them make those choices of where the balance is on that. So who wins here? It's not the investor, but the peddler of crypto dreams. Ethereum recently raised $15 million in their, quote, Ether sale for an unfinished project, in Bitcoin, of course. There isn't even a product yet, but investors have placed their bets. Ethereum now has over 30,000 Bitcoins destined to be worth unspeakable volumes of wealth, while investors hold worthless hope. And this is one place where it's kind of funny is thinking back, this was before Ethereum had launched. There was question, would it actually launch? And obviously it did. And there have been times throughout the history of Ethereum where the price has gone up to a point where this section of the article started to feel a little off the mark. It's like, well, it came out and, the people who were in at the beginning did phenomenally well. So we should note the $15 million raise at the time, I believe, was the largest, maybe the second largest, but perhaps the largest crowdfunding project in internet history at the time. Obviously, it's I think peanuts compared to what has been done since. But at the time, this was like the biggest one. And it didn't even exist. And, as it says here, over 30,000 Bitcoins. So, it has grown. But for those people right at the beginning, there are ways in, I think even right at the beginning, you would technically be sort of at a profit. But that's like specifically if you were at the beginning. Anyone else who has come into Ethereum since, you can go run the numbers on, the ETH BTC. But broadly speaking, that was not a good play. So these people, some of them made out very well. But once again, you always have to be looking at that Bitcoin denominated, chart to be able to get a sense of, based on when you got in, how well did you actually do? And given the context, the historical context of this, it wasn't clear if it was going to truly launch and so on and so forth. And so I think this still holds up in certain ways, although, I can't lie and say that like Ethereum didn't launch or anything and that there weren't people who did get wealthy from it.
Yeah, so I think 2 points. One is that they would have all been better off selling in 2017 because it's been down since then. The second is that if you have this mental model, well, I'm going to invest in early stage crypto projects. And so you put 2% into Ethereum, 2% into the, 49 other promising early stage crypto projects. You'd be down bad versus Bitcoin, even if your little Ethereum position did do well. And so it really, I think it comes down to a cognitive model of if you let yourself get scammed by Ethereum, you also let yourself get scammed by 49 other projects. And so the idea that you would have been an Ethereum maxi from day zero and then sold in 2017, and thus you can claim that this article is incorrect. I'd like to meet those people. I don't think they exist.
Yeah, agreed. And you have similar. You have stuff like Tezos, where that was another one that was supposed to be a Bitcoin killer, and they raised a very large amount of money. In fact, I think they still have one of the largest Bitcoin treasuries, and all people got were some tote bags out of it. The token itself was an abysmal failure, but the foundation ended up with a ton of Bitcoins, and I don't know what their plan was. I think you have a very good point, and yeah, you're when you go from 1 to N, which is just like entering the world of crypto, where it's sort of this infinite thing. What is going to be your bounding principle? What is going to keep you sane and actually focus on what is the best? And if you have our view of money that we've expressed throughout this series, it's kind of a tough sell to think any of those, because as soon as you say that something can beat Bitcoin, now you kind of necessarily have to believe that something will beat everything else. And so you always have to be on top of all of these different stuff, which means not only were you putting a few percentage points of your net worth, if not more, your portfolio into things like Ethereum or Tezos or, whatever projects, that also meant you had a lot of people who were spending all of their time reading white papers and trying to speculate and think about all of these different things in a way that I think was foundationally just fallacious. But in any case, it almost doesn't matter, just the amount of time wasted on that, which also means that was time not dedicated to doing things that were bringing more objective value to the marketplace in a way that's measurable by, did you increase the number of sats in your holding or did you not? And I think that time should be taken very seriously, considering its role in production. So the lesson from this in italics: investments are scams because they lead you to believe that you can get a higher return than holding Bitcoin itself, despite the economics of Bitcoin naturally making this an absurd claim in the medium run. In a post-fiat world, there will be plenty of investments that have a greater return and risk than holding Bitcoins, but there'll be assets that generate Bitcoin cash flows. And I would point out that something like that would even apply to some of the sort of Bitcoin treasury company financial engineering. That's at least what they are attempting to do, is create Bitcoin cash flows effectively that can then be reinvested into that. And so some might, and I'm sure there are going to be Bitcoin treasury companies that arise that would very much fit into this kind of, critique, but I don't think that it's at all inherent that they would fit into that. But it's of course up to the individual to determine, is it worth the return and risk relative to just holding, because that does come with all kinds of risks that don't exist with just holding.
Yeah, so the whole premise of the Bitcoin treasury companies is that they cannot get a higher return than holding Bitcoin itself. So they're not out there investing in real estate projects or building a factory. They're saying that in this fiat world, the highest return on invested capital you can get is from just holding Bitcoin. And so that's from the company's perspective. Then from the shareholders' perspective, what they're looking at is, okay, well, if this company is just going to acquire Bitcoin as an asset, are they going to, if I own stock, if I own these shares, is it somehow going to have more financial leverage than I can just get on my own on Bitcoin's returns? And so the shareholders, I think, are just saying, I would take on more risk to get a higher return, and that's the trade-off that I'm doing. And they're really just focusing on just the financial aspect of Bitcoin's price going up, and they don't really care about the self-sovereignty part of holding your own keys and running your own node. So it's kind of it's an interesting inversion of, well, the company agrees with you that investments are scams, and that's why they're not investing and they're just buying Bitcoin.
Yeah. So investments are scams, but they don't have to be. If a Bitcoin hoarder wants to reinvest his profits, he need not look further than the Bitcoin network itself. The correct strategy for Bitcoin entrepreneurship, as Daniel has pointed out, is speculative philanthropy. While endless money has been funneled into altcoins, app coins, vaporware, vulnerable third-party services, etc., there are many problems in Bitcoin that still need to be solved through open source development, many of which are low-hanging fruit. By funding these projects, the security, accessibility, and usability of the Bitcoin network increase, thus making it an even better investment. Git coding. Every new Git commit is good news for Bitcoin. So this, did not include, other ways that you could sort of look at investment strategies in a Bitcoin in a Bitcoin mindset. But that being said, this is another side, and we discussed this in a previous episode on the correct strategy for Bitcoin entrepreneurship, the way that open source development actually feeds back into the value proposition of Bitcoin. So it's a good way to actually invest in the network, so to speak, even if it's not getting a monetary return in terms of how many sats you have. It could be helping impact the purchasing power of Bitcoin or potential purchasing power of Bitcoin. Continuing on, hoarders are scammers. The Bitcoin hoarder is in a constant battle with himself to lower his time preference as much as humanly possible. It's the only way to optimize his Bitcoin holdings. My friends and I joke about starving due to the intense deflation, but I can't say I don't look back and wish I had skipped a couple lunches in the crappy dorm cafeteria to buy $10 Bitcoins when I had the chance. Bitcoin hoarders are excited about the price about the price rises, but they are also excited when the price is on its way down. Coinbase just months ago was willing to give me a Bitcoin for $1,200, and now they are only asking for $475. Whatever price, the Bitcoin hoarder thinks to himself, suckers. Bitcoin hoarders are in it for the long run. Their strategy is not to buy low, sell high, but to buy any, sell some highest. They will do anything to get their hands on more Satoshis, and there is nothing that makes them happier than a schmuck giving up the goods after being convinced Bitcoin is only worth some amount less than Moon. These sellers have volunteered to hold the fiat bag, and hoarders will not be so quick to help them get rid of the stench. Indeed, hoarders are potentially the most dangerous scammers. While merchants and investments are outright with their desire to take your Bitcoins, hoarders may not always be so explicit. A person can prove that they have the private key to Bitcoins, but they cannot prove they do not. With this in mind, it is plausible that any vociferous Bitcoin skeptic's bold assertion is actually a psyop attempting to affect market demand, and subsequently the price in their favor. For instance, when Paul Krugman recently said in the Long CryptoCon that it's, quote, it's not at all clear whether Bitcoin technology has any economic value, we cannot know with epistemological certainty that Paul Krugman is not a Bitcoin true believer hoping to get his hands on more and cheaper Bitcoins. Hoarders are scammers because they understand the exponential and very likely growth potential of Bitcoin, yet are willing to convince other Bitcoin holders by any means necessary that the future value to them is probably not much more than the current market price. So, I think this is, something just to think about yourself is like when you're buying Bitcoin, someone has to sell it. And, there's a funny feeling to think like you're actually willing to give up Bitcoin at, whatever price less than the total expected value of a future Bitcoin. It's an interesting game to play. It's one that you have to think through. There's a great quote from There Will Be Blood where it's, we won't give them oil prices, we'll give them quail prices, saying is like they want to, Daniel Plainview wants to buy up some land, but he doesn't want to, the people selling it don't realize that they're sitting on tons of oil and how expensive that could be. They just know that they have land that's good for quail hunting. So he's like, well, I'll give them the money they want for that. And I think all Bitcoin hoarders kind of have a similar mentality going into the purchase of Bitcoin.
Yeah, I think that there's now more and more thinking of, okay, how do I simultaneously get the value from, being able to spend dollars while not selling the Bitcoin. And so people are like looking for ways to borrow against their Bitcoin or to like do financial derivatives and, generate yield income from the volatility and all of this. And I think that, people need to just realize that there's a lot of risk with those opportunities as well. So it's not like there's a free lunch there. and that you should never sell your Bitcoin and find other risky ways to get cash. They got to realize that like anything other than just holding Bitcoin has risks that come with it. And the other point is that there's lots of people who like they bought Bitcoin $1 or at $10 and then it goes up, multiples of that. And at that point, they do feel like they bought at quail prices and now they're selling at oil prices.
Right. And so, for different people, it is going to at some point be such a large thing that they are willing to, take advantage of that newfound opportunity that they were waiting for. I think on the, you're saying there's the risks with any kind of loan structure and all of that. And that's, to me, that's an obvious thing. It's like it's very like it does come with risk and it's not a free lunch. But what's also interesting about it is the fact that if you have someone who is able to maintain a good enough cash flow that they can, service that debt and do that in a generally a reasonable way that they can keep that up. The only reason that happens is because there's someone on the other side willing to lend them the dollars, which also it's like, well, like, does that person not understand, what's possible here with Bitcoin? So, many different people are operating with different time preferences and just different preferences altogether as to what kind of, future returers that they are trying to achieve in the market. But, hoarders are, Bitcoiners are very, cunning in their way of coming up with ways to not have to give up their Bitcoin, but to also get their hands on more. And those who are handing them more Bitcoin, every time Sailor buys coins, someone had to sell it to him. All those people should be thinking through it. So hoarders are scammers, and you should thank them. And basically, the argument there is, hoarding is what gives money value, and no, you can't have any. Great news for Bitcoin. So this was just sort of play on. We had thoroughly discussed the topics of hoarding before, so this was just us to be able to mitigate these things, these issues, in order to run well. And so this is a call for Bitcoiners to be thinking about that and how to take the commercial system that we have. We already have a lot of great services out there, but a lot of them are very kind of, perhaps fiat mindset. It's like, how can we take our knowledge of cryptography and Bitcoin and so on to improve all of these things to make it even better for allowing commerce to exist? The only winning move is not to spend. We live in a state of total war. Everyone who holds Bitcoins is trying to get more by scamming others out of theirs or convincing others it's not worth trying to get into. Everyone who does not hold Bitcoins was either scammed out of them or was scammed from getting into it. Having Bitcoins takes the knowledge and will to know and desire its future, while not having or spending them is lacking one or the other. If you hold Bitcoins, you must take a breath every time you wish to send any to another person. Ask yourself if that person truly deserves untold amounts of your future wealth for pouring you a beer. You may just find the will to hodl more. Hyper-Bitcoinization will not be a force to trifle with. Even a marginal Bitcoin holding right now will constitute a very significant majority of a Bitcoiner's portfolio. Once it happens, there is no going back. One day, your Bitcoin balance will likely never see the decimal point move to the right again. Bitcoin will break for no one on its race down the road from serfdom to global domination or liberation. Do not give your seat up for someone else. And so, yeah, I mean, this is the real takeaway from the article is that we should be thinking in terms of our actual long-term values in light of the fact that you have the ongoing process of hyper-Bitcoinization. And I closed this article out with this line in italics. It's just scammer in italics, in quotes, is a heuristic, not an accusation. And I think this is an important point. Like, the word scammer gets thrown around a lot in the Bitcoin world, and a lot of people get upset about that for various reasons. Within this article in particular, I wait till the end because there's something cheeky about, letting people get flustered before, they fully think through the substance. But the idea here is that scammer is more of something that is from an individual mindset looking out at the world rather than trying to objectively state some other entity is a real scammer. It's really about what are your personal values? What are they in the future? Should you be rethinking them? Are there ways in which the sort of calculus of Bitcoin in the long term inspires you to actually want to change those values? And if so, be sure to do that hard work, because otherwise, there's just people out there. They're just people in the market. There are people selling stuff. There's people who just want to, have savings, et cetera, et cetera. And their actions do affect your ability to make those choices for your own future. So be very future oriented is the ultimate lesson that I wanted to make with this article. So this is the last of our journey through the mempool crash course. So I think we've done about 26 episodes so far going through this, and I think we've gone through from the fundamentals of Bitcoin to how to position yourself mentally for what is to come. And I hope listeners have gotten a lot out of that. All right. Well, thank you, Pierre, for joining us. All right. Thank you for listening to The Reorg. This podcast is brought to you by the Satoshi Nakamoto Institute, dedicated to advancing and preserving Bitcoin knowledge. Our mission is to deepen understanding and appreciation of Bitcoin, not just for today, but for generations to come, by creating enduring educational resources and generational knowledge for generational wealth. If you enjoyed the show, please support our work by sharing links, deepening your own Bitcoin knowledge by exploring and studying the SNI archives, and contributing sats. As a 501c3 nonprofit, we rely entirely on supporters like you. Whether you can give a few Satoshis or a few thousand Bitcoins, your contributions enable us to continue educating current and future Bitcoiners worldwide.